Welcome to Breaking Banks Africa. I'm Matteo Rizzi. Let us take you on a journey of entrepreneurship, innovation, and vibrant ecosystems Africa has to showcase. More than 1 in 4 people will be African by 2050, this continent being already the youngest of the planet. You can't miss these stories. This is Breaking Banks Africa. Let's roll. Hello guys, welcome back to Breaking Banks Africa, episode number 17. My name is Matteo Rizzi, I'm the executive producer of the show, and today we are with the first Egyptian-born guest, CEO of Fintra, Waleed Sadek. Welcome to the show.
Hi Matteo, nice to be here.
So let's start by the usual couple of minutes. Tell us a little bit about your story. Fintra as a group of company. Today is Breaking Banks Africa has a special spin because I'm also wearing partly the GFTN hat because Waleed is going to be one of the speakers of the event that GFTN is doing in Uzbekistan. I'm super curious how a Northern African goes to an Uzbekistan event. So a lot of open questions. But Waleed, over to you.
Pleasure. Thank you very much, Matteo, for inviting me. Happy to be here and to share our story. So basically, I'm Waleed Sadek, founder and CEO of Fintra Holding. We build payment systems in short. So we're a group of 4 companies. The first one is Paysky. Paysky is the infrastructure part of the group where we build payment components and payment systems for banks, telcos, central banks, postal institutions, and fintechs. We are already operating in 18 countries, offering basically a set of 22 products along the value chain of payments. Among these 18 countries, we have built the national payment systems for the governments of 10 countries in Africa, building from basic payment gateways for national payment systems, national remittance hubs, QR code interoperability switches for national level operations, amongst many other solutions across Africa and the Middle East.
Are we talking, sorry, Waleed, are we talking about instant payment systems that you built?
That's one of the solutions that we offer as well. One of the 22 products I mentioned.
Okay.
Yeah.
Okay.
And then taking instant payments beyond even just being a transfer infrastructure, but rather availing retail use cases and B2B wholesale payments use cases, and amongst many others. We also work with leading telecom operators across Africa and Middle East, providing them with payments infrastructure and e-commerce capabilities. The other company is UPN, and basically after we have implemented all these payment systems across Africa and the Middle East, we thought, why leave them disconnected as fragmented islands? Why don't we connect them all together? And that became the first African-grown interoperable cross-border payments network that has extended, initially started from Africa, and now Africa and Middle East, and hopefully soon also Asia. And from there on, becomes a global payment network of interoperable transactions for not just for cards, but also for bank account payments, wallet payments, and domestic card scheme payments.
So what you're saying, and sorry, Waleed, because we always have to keep in mind that our audience is actually broad; they're not all payment specialists. What I'm saying is that what you are saying is that if, for example, 2 African countries they've implemented your like a national payment switch, in different currencies, of course, they can send an instant payments, let's say wallet to wallet, okay, because you made them interoperable, and I suppose that the fees gets embedded, in the transaction, etc., right? So you're
correct.
like and you're the plumber enabling this type of payments. I wonder whether or not you manage the actual payment, so you're the one taking the fees, or you're just the infrastructure that enables the operators to actually enable the payment.
We're basically a network of networks, so we do not really become the scheme ourselves, but rather the network of networks. So we connect all these networks together. We manage the flows of transactions. Of course, we charge a processing fee for that, and for the underlying settlements that happens after that as well. But the client remains the participants and the customer of his particular service provider, whether this is a local card scheme or a local wallet or a bank account in his local market.
Amazing. So we are two out of the four companies, if I
Yes,
remember correctly, right?
that's correct. And then we have found that we've built the infrastructure layer, and then the network layer. There is an inherent design issue of building payment systems, which and specifically payment schemes, like we're building with UPN, is that we always rely on the last mile when it comes to the last mile enablement, consumers and merchants and businesses. We rely on banks or the relevant financial institutions in that cycle, which always can be hindering in the growth process. So, and what's really when we really dig deep in that, and because I've been in payment space for over 20 years now, I used to lead innovations at one of the largest global payment card scheme in the world out of Cairo office, and then new innovations and new technology innovations from Cairo and then Dubai office. And then I moved with them to London office to manage strategy for CEMEA region. That's Central and Eastern Europe, Middle East, and Africa. And kind of touching firsthand the challenges that the banks face. It's basically their capability around digitization and coming up with digital products to manage the new emerging needs for clients globally. So we've built a capability for the last mile enablement, acquisition and onboarding and activation using digital channel. And that's basically our third company, Yalla. So Yalla is a consumer direct to consumer proposition that we use for two reasons. The first one is we hone our distribution model that we offer to our banks within this scheme of schemes offering by putting this into the market and seeing real market experience. And the second one is it acts as a market enabler for UPN to obtain necessary required licenses in territories where we operate, where the regulators would require us to have specific either remittance solutions or a payment solution in order to touch the payments flow for UPN transactions to flow cross-border. So that becomes the third company. We have launched Yalla in multiple territories, starting by Egypt. When we launched the model in Egypt, it was the first time, it was the closest thing to a digital bank. Egypt doesn't have yet a final digital bank regulations. It became the third largest private sector digital banking platform in just 9 months, onboarded over 1.5 million customers and transacted over 14 billion Egyptian pounds of worth of volumes with very active consumer base and ratio and a very low cost of customer acquisition as well.
One question on Yalla, Waleed, is that part sort of was it built to comply with the onboarding side of the business? Because it looks like the identity side of the business was mixing. So I didn't know what the four companies were. So is that the main reason? So sort of a flying onboarding to be, because that's the only way to explain the growth of Yalla in such a short time. So was that built with the intention of solving the digital onboarding of the clients?
That was a big portion of what we have solved in Egypt, indeed. And hence one of the reasons behind this accelerated growth that is unheard of in the market. I mean, just to put perspective, the largest private sector bank in Egypt has 2 million accounts acquired over 50 years. We've opened or acquired our 1.5 million accounts in 9 months, and that was primarily driven by digital capabilities and digital onboarding, indeed. And also the offering. So we have very comprehensive and compelling financial services that are tailored for the masses, not necessarily for the elite, that would solve their daily life problems around payments, around moving money domestically, around receiving money internationally, around saving money as well, because nobody cared for the low ticket size savers and investors. So for the first time, for example, that's one of our products. We have offered consumers in Egypt to invest in gold. So when they hold their money, instead of holding their money in cash in their accounts, they can hold the money in a form of gold. And when they want it as cash back in the cash format, they could just with one click sell it back to us and have the money put back in their account so that they
I
can use it.
almost want to say like a mini Revolut for Egypt. I have really on the on the point of my tongue. It's because there are a lot of, but maybe your dreams are bigger. I don't want to say, but it like it reminds a lot, right? A fast onboarding, technology driven, like a focus on the client. I wanted to ask as well, Walid, is there
Yeah.
like a digital license? Or I mean, does the Central Bank of Egypt, which I know well, I say, kudos to the guys. I think I spoke probably 5 or 6 times at events organized by the central bank in Cairo. They are very forward looking. They even launched their own fund, which was very pioneeristic, for a
Yeah.
central bank. Maybe it didn't go as well as they as wished for, but simple the idea, was amazing. So, what about? I'm curious about. Is that a digital banking license, or you're endorsing yourself to an existing bank, you're using license someone else, or you just cope with the payment license and you build everything on the top?
That's a good question. So we effectively hold a payments license in Egypt, but when we launched Yalla, the consumer part of the business, we kind of bundled this with the license of one of the existing financial institutions,
Mhm,
because digital banking regulations and licenses were not yet available and still in the
mhm,
process now. So we did that with a partner bank. So we kind of uh, leveraged their existing licenses, compliance framework,
mhm. Makes sense.
infrastructure in some cases, and then we added our own digital innovation layer for the acquisition and activation.
Yeah, the same ways as Wise, TransferWise back then started. So there is nothing strange there. So now I'm curious about what the fourth company is.
Right. So based on the kind of with the current success that happened with Yalla, we've received several acquisition offers from existing incumbent banks. So
No
because we cannot,
wonder.
yeah, so because we couldn't sell Yalla multiple times, we thought if people like the model that much, why don't we franchise it? And so for
Uh,
the first time ever, we are proposing a concept of a digital bank as a franchise. So we help you build your own digital bank, either for consumers or merchants or both. And we give you not just the technology and apps, we give you the training, the know-how, the go-to-market playbooks, best practices manuals, and support in 10 areas till we launch. Business
Now, wait,
development,
wait,
product.
wait, wait, wait. Let me stop you
Yeah.
just there. And I realized that we didn't have time because this show is about you, it's not about me. But you're touching so many sort of intersections of things that I've been lucky enough to do in the past. So what you did is exactly what Feeder Bank did. I want to say 15 years ago. I don't know if it rings a bell, but Matthias Kroner, good buddy, former actually host at Breaking Banks. As well. He built Feeder Bank, one of the first, digital banks, and then he did exactly the same. He said, why don't we license it? I have two questions on this. The first is, why would someone in Egypt build a competitor of Yalla? That's a very basic question, unless they want to do a vertical that Yalla doesn't do it just yet. For example, consumer lending. That would make sense. Open question. Second is this stack available, and the goal of it to make it available beyond Egypt, of course, because that would be the only, the only decision why a business decision like this would make sense, right?
Exactly. Thank you, Matteo. That's exactly the point. So the idea of franchising, the concept is predominantly for the expansion. So instead of having to raise funds to go to market two, three, four, five, and 10, and then 20, if we can franchise the concept, we can accelerate the growth and expansion by having parallel entities with local knowledge, local licensing, and possibly local funding of our partners who would achieve this and take everything else from us in order to launch a digital bank, our digital banking platform, I would say, because I think with what we're doing, as I'll come to explain later on, we're doing more than just what standard banks would do. So the primary concept is basically for expansion, as you rightly said.
Mhm. So now it would be a good time to understand, you know, the relationship between you going to Uzbekistan,
Exactly.
and the four businesses. It seems like there is a lot you can talk about.
Yeah.
From connecting, for example, the central bank switch, to start building bridges, or to, I imagine, if I were you, being able to like sell your platform, to local players. Is that what's behind? I mean, what are you going to talk about? And is that part of the mission of you going to Uzbekistan?
Exactly, Matteo. That's exactly the purpose. So, the point of going to Uzbekistan at this point is to share our story with the banks and financial institutions in this beautiful part of the world. It has been sharing its own evolutionary path, and we think with what we have built in multiple markets in Asia and in Africa and the Middle East, we can also contribute to that growth in Central Asia. Um, and that works across the four companies in the group, to be honest. So some banks would opt for the infrastructure as a solution, as a technology solution, which we can offer by Paysky. Some of them would want to be part of UPN for cross-border payments and remittance interoperability, which we'll always welcome. And finally, many of them would be open to kind of get a world-class digital banking in a box, basically, the platform that we can give them with a 90 days up and running plan if they want to do so. So yeah, these are the three areas of potential exploration I would like to do in Uzbekistan.
So the one of the things that sort of triggered me when you were talking about you exploring these other parts of the world was, you know today there is clearly two different parties, in cross-border remittances.
Yeah.
The one that only preach stable coins, and the other ones who are basically trying to build, or like Swift is a good example, right? Swift, we in Italian we have a very nice expression. Swift really kept the ass in two chairs, because they just added a layer so they can do stablecoin transaction, but they just built it on the top of the existing network, while their entrepreneurs are just build stablecoin rains and then do off ramp. What's your vision? I mean, I don't want to know about, maybe yes, there is an evolution of the platform that goes towards there. I wanna ask your evolution as an African brother, as a payment expert, on this trend.
Okay. Again, that's an interesting question. And the way we've approached this is as follows. We believe that the mainstream fiat-based economy is still much, much bigger than the digital assets based
No
and
doubt about it. No doubt about
running
it.
economy. So we have to comply and we have to cater for the existing status quo, and we have to cater for the existing regulations, existing consumer preferences, existing wealth pockets as well. So the way we see this happening and the way we're approaching this within UPN is basically it's a combination of offerings whereby we would allow transactions to flow using fiat, and then on the underlying layer of clearing and settlements, we will give the option of stablecoin based settlements. So it basically gives the optionality and gives the openness of using different currencies, but we also inherit the efficiency of cross-border settlements using the stablecoin rails. So it's best of both worlds, I would say.
Yeah, it's a very reasonable and comprehensive approach. I wonder now, how does it work on the KYC on both sides? So I am tomorrow, the Central Bank of Uzbekistan decides to implement or to connect their switch. Imagine they have one, okay, or even they ask you to build a switch, best possible
Yeah.
outcome of a business trip, and then they use a UPI, right, to connect.
VPN.
UPN, sorry, UPN. Yeah, UPI is the English, the Indian
India. Yeah.
identity scheme. Sorry,
Yeah.
uh, too many acronyms sometimes. So they use VPN to connect it to the rest of the switches that are connected, right?
Yeah.
So KYC is handled on both sides. right? By the
Yes.
respective. How does it, if I send, I don't know, even like 100 shillings, from Egypt to Uzbekistan, how much money will arrive on the other side? Or in the other words, for the receiver to get 100 shillings, how much, the cost is it going to be?
Right. So it's a good opportunity now to kind of explain that UPN is not a scheme of its own. So it's unlike, for example, Visa or Mastercard. We are not building a new payment trail with acquisition of clients on a specific account, branded accounts like a Visa card or a Mastercard, but rather we are connecting already existing clients in existing payment schemes, whether these are wallet schemes or local card schemes or bank accounts. So by definition, that gives us two things. All these clients are already pre-KYC'd and pre-identified on their local payment systems. And two, it decreases our cost of customer acquisition dramatically compared to the
Yeah,
likes of Visa and MasterCard because we don't really need to acquire new customers. We're just connecting existing clients. And hence our cost of customer acquisition is since our cost of acquisition is very low, and our role is primarily technical infrastructure operation, we can offer the services at a much, much lower cost than the international operators would do, whether these are Swift or any card payment scheme. So as we stand now, we offer our payment services and for cross-border transaction routing at almost 25% of the cost of international payment operators in that space.
I get it. So you're just giving them a cheaper opportunity of performing a transaction that has the same sort of the network cost, because the
Yeah.
network costs are not even covered by you. But
Yeah,
the layer that would basically bring the money from country A for country B, that's the cheapest way of sending. Okay, now I get it. And I
exactly.
think everyone gets it now.
Yeah.
Okay. So, by the way, I have an official invitation, since this is like sort of my podcast. I can do whatever I want. Uh, we we are curating also the agenda of fintech islands in the Caribbean. And we're going to have a lot of central banks coming over there. So you're officially invited if you want to extend,
Great.
your footprint in the Caribbean, because one, there is a lot of cross bridges to Africa. Two is the exact kind of businesses they need, because we're talking about a fragmented ecosystems. It is not as big as Africa by number of countries or by volume, but it's the same sort of cluster of very different ecosystems. And actually, yeah, maybe this is how I would wrap up this podcast. Until 2, 3 years ago, we were talking about payment orchestration. There was this new, buzzword that everyone was using. Would you still think that we are in the orchestration phase right now, or what is the next buzzword that will be associated to payments in the coming, like, I want to say 1 to 2 years, right? Because the payments is evolving so fast. In 10 years you might change 5 times. What is the next one after orchestration? What do you think, if you had to guess?
Okay, so on orchestration, I think we have as a company as well. I can relate to this. I can confirm this because we have both implemented this when we, not just implemented and kind of evolved to this concept. So we've implemented this as Paysky, building orchestration layers on national level, but we have taken this to orchestration to kind of global cross-border orchestration as well with the UPN concept, allowing transactions to flow in multiple paths according to the best possible route in terms of cost and efficiency and availability with UPN. So I can kind of confirm that stage of maturity. I think the next stage of payments will be invisible payments.
Nice.
Payments.
In this way, I would have picked like a global interoperability, but there are two words. So is invisible is actually interesting one.
Interesting. Yeah. So when you look at the agentic commerce and what's happening on that front, payments will be an embedded process within normal commerce flows, will be an embedded process within commerce investment flows. So payments will not be identified as a separate offering, but rather as a chain, as a ring within a chain of offerings that a service provider would offer. It will be embedded in commerce, specifically in commerce, and not just by agentic, but even when you look at tokenization, for example, what's happening with Apple Pay. Nobody touches a card anymore. Nobody knows the form of his card. Nobody, of course, remember the card number. So payments are getting more and more invisible, embedded within processes, embedded within technology that will become a commoditized in a way that it will not be identified as a service of its own, but rather as a component of a wider offering.
Yeah, that's, while you were talking, I was thinking that there are different level, right, of interoperability. And at the consumer level, you are 300% right. I wonder whether or not the the bigger amounts, right? The big trades sort of payments, orchestration, if anyone has really cracked it. Because, when you look at the commodities trading, for example, everyone is still hoping to get enough trust to trigger an MP103 on the other side, right?
Yeah.
At the same time, there are gold miners, physical diggers who have their USDT address, and you can send stablecoin directly to that. And at the consumer level, 300%, I think you guys cracked it, and I understand how you even, the four forces that you have built, they build to each other. I wonder whether or not at the high value, payments, technology still needs to crack it. I believe that's my own impression. I don't know what, as a payment expert, you are, not me. I'm just observing. But that would be my statement. Would you agree?
Very much so. Very much so. I totally agree. This area is still underserved, still kind of being tackled by old classical ways. Of course, there would be anticipated disruption coming up with the massive adoption of stablecoins at some point of time. There will new currencies would evolve, and it's not necessarily USD backed or euro backed. New currencies that might be backed by real world assets like gold would evolve. That might pose themselves as the substituent trade alternative for cross-border payments. So I think we're at a very interesting inflection point. The world is changing in a very quick way. And as soon as this kind of alternative currency evolve, I think this will open up a lot of opportunities for innovation, even on larger scale, larger size transaction volumes.
Interesting. I like that we are aligned on this. I wasn't sure, I wasn't right track, but if my high level thoughts are backed by someone like you, then indeed there is. I think I spotted, we spotted a good need in the market. Waleed, thank you very much for being with us, and good luck in Uzbekistan. Is that first time, I suppose, in a country, or?
Yeah, first time. Looking forward to that.
Okay. I look forward to meet you in person. If not in Uzbekistan, I'm pretty sure our path will cross soon. Thank you so much for being with us.
Thank you for having me. Thank you, Matteo.
Guys, that was Breaking Banks Africa, episode number 17, and this is a wrap. Thanks for listening to Breaking Banks Africa, a Provoke Media podcast in cooperation with timepledge.org. Don't forget to share us out or shout out across social media. If there is something or someone you would like to hear on our cast, let us know. See you next month on Breaking Banks Africa.